Hello, traders. It's Michael coming to you from GammaEdge on Thursday, November 7th, with our pre-market morning strategy and briefing session. Three pillars here at GammaEdge: sentiment, structure, and trend. We'll go ahead and jump right into the trend, showing our market trend model here. The bolded CT is now above the moving averages. And still moving up towards the colored ribbon. So we're still prone to failure once we're under the colored ribbon. Colored ribbon's the bearish longer term state. Red is significantly below cyan. So the first area that we would consider a point of failure would be moving into this colored ribbon and then watching the bolded CT above these moving averages for some sort of stalling, and then a possible pullback and rolling over to the downside once we start crossing these moving averages. If we continue to the upside and emerge on the other side of the cyan line, then we'll change both of these slopes to a positive. And then ultimately, if the CT continues to live above this colored ribbon, we'd look for the ribbon flip, which would be an indication of a longer term bullish change in the overall trend in the market. So again, still under the colored ribbon, still prone to failure, but we're seeing a significant improvement in the shorter term time frame, which is the bolded white line, the CT, the instantaneous, which is your intraday. We're seeing bullish tag combos. And then your 1 to 3 day, which is the moving averages, those are now in a positive slope and stacked in the proper order. So we'll continue to monitor this day over day. I anticipate some sort of probably consolidation and sideways action in the CT that would give price to either consolidate or pull back. And then we'll see how the CT reacts, which is the buyers versus sellers in the overall market. Jumping right into the all expiries, SPXP, obviously call dominated above below spot price. We have a significant gap up in the market. We do see OTM call speculation continue to be present. PGX at 6,000 now, COI at 6,000, so that's upper target. Obviously, I've talked about that, a few months ago, pre all of this noise and news events that we've had in November. But that seemed to be the likely scenario that we were moving towards, and now the OTM call speculators are targeting that level, obviously, for the end of the year, most likely. So in the short term, staying above transition 5,900 will be extremely important. We see the DEX transition outlined here. Even a pullback to 5,850 would be overall constructive in the overall market. Might give some back and fill, some consolidation, and price overall relief from the significant move up. But obviously staying above 5,900 would be the first line of defense in the sand for the bulls. And then staying above 5,850 would be that next line, DEX transition here. So we'll continue to monitor that. As long as we see the PGX and COI up there at 6,000, obviously we see the JPM strike up there, we would continue to have the thesis and overall outlook that will continue the price appreciation towards those levels towards the end of the year. The snapshot, right-hand plane, left-hand plane, we are now call dominated. Prior day was mixed in the right-hand plane. We're now call dominated there. So we've seen significant OTM call speculation come in. So we continue that day over day. Net GEX increasing to plus 85. That is a bullish look also. And then we have transitions that are moving higher. The transitions are moving higher due to in the money and out of the money call speculation, and the overall structure continuing to move up, which is bullish, as discussed here in the notes and observations. And then obviously the plus GEX and COI prior day and today, plus GEX moves up also. That is obviously bullish in the overall structure. So that's why we like to monitor those day over day to see that structure movement. SPX P0 DTE, call dominated above and below spot price, transition unambiguous. A little wider, but still narrow with overall context of the expected move, which is now less than 1%. Again, pull back to 5,900, 5,895, which would be the bottom of the transition, would be an area that we'd like to see price action stay above. And then moving up to P-trans there at 59.15, 59.20, obviously staying above that level, but we are in the money call dominated below spot price. So any pullback is an opportunity to get involved in the market and for a move to the upside. We do see that OTM call speculation start to wane pretty quickly above 59.35, obviously 59.50 there most likely, unless we see positive slopes on the vol am command. That would be where I'd probably look for the stalling. Obviously, drunken sailor range, we've drawn that at 59.50 also, so that'd be an area where I anticipate capping of price action unless we see significant move up. Obviously, FOMC today, so most likely I'd say range bound, maybe some slight volatility in the morning, but then range bound and lower volume in the afternoon until rate decision. The net stack command 5950, I discussed that in the right hand plane strike, really confluence on the web app and the net stack command letting you know where that upper limit most likely will be. Significant in the money calls below us. If this continues throughout the day, the charm of those in the money calls will continue to grow. We see the out of the money puts there at 5900, out of the money calls 5950. You can watch this in the automated channel. This will continue to change throughout the day. Net gamma 59.25 for those out of the money puts, but you see that left hand plane intervals extremely small versus the OTM calls. So again, 5900 pullback, 59.50 to the upside. That would be the range I'd anticipate us to be overall bound for most of the day. Sentiment call dominated now. Prior day on today, we continue to see this higher. We do see the DEX transition move a little bit lower, so that's obviously bearish there. But just when the overall context, we see COI and plus GEX continuing to advance, so that's bullish in the overall structure. So significant more bullish changes in the structure than bearish, and we see the net GEX up slightly day over day. Expected move dropped significantly. Obviously, we removed a significant amount of that volatility even into the FOMC today. Net stack command for +1 DTE, or sorry, yes, +1 DTE. We see that upper strike at 6,000 now, PGEX COI, out of the money calls, but we see the in the money calls really entrenched at that 58.50 confluence of what I've discussed. So that's why I was discussing any pullback would still be constructive down towards 58.50 due to the just enormous amount of in the money calls below us. That will be a sponge and most likely supportive on any pullback, even depending on whatever happens with the rate decision today. So overall thesis for me, less is more today, significantly. News and noise events on the horizon with the FOMC. So we've kind of had a double whammy this week with the election, FOMC. Again, I've drawn the drunken sailor range that we've discussed, 58.80. I've kind of drawn this 58.50. This is where the gap up was. It's 58.60, but I'd even pull it down to 58.50. Any pullback towards that is still very constructive within the overall bullish structure and trend. And honestly, I would like to see that just because of this major gap up. I'd like to see us pull back and kind of retest that 58.50 and really let us know how strong the buyers are and the in the money call holders here at 58.50. Obviously, if we get below 58.50, then we'd be looking down towards 58.25 and 5800. Where we've started this overall gap up move. So we'll continue to see. I would anticipate in the coming days that we'll see, even if we moved up to 6,000, we'd see some sort of stalling and pullback and consolidation and a retest of this 58.50 level. So we'll see how that plays out. But that's my thesis for today. Again, less is more. I'm really not going to be doing too much today. In the money, or sorry, leverage ETFs. I'd like to see some sort of pullback to really add to leveraged ETFs, just give you an overall better risk reward area. CT is indicating obviously that we could move higher, the bolded CT, but we're still prone to failure under the colored ribbon. So we're in that area where I would not get out over our skis. We're seeing significant bullish developments, but we're still prone to some sort of consolidation and pull back after this large gap up. So just make sure you're managing your risk and doing progressive exposure as we continue to watch the plus GEX and COI move up towards 6,000, and obviously most likely that end of year target somewhere around there. So that's all I have for today. We'll be exiting Adobe in P2P. Obviously that's been a long-term hold that is underwater, so glad to get that off of our portfolio and be able to move on if we start getting TC3 plus signals in that area. So that's it. Hope everybody have a great day. Be in the Discord in just a few minutes and then I got to head out. So again, make sure you're looking at the SPX game plan and the overall market trend model. And I would just do less is more today with the FOMC rate decision upcoming. So, all right. Thanks, everybody. See you in just a few minutes.